Good morning, everyone. Hope you're doing well. Happy Wednesday. I wanted to get you another mortgage rate update considering everything that's going on in Iran and Israel right now, how it's going to impact housing, how it's going to impact mortgage rates, how it's going to impact you and your affordability. So as always, I'm going to show you a behind the scenes look of mortgage bonds trading. This is what actually controls rates. The media continues to mislead people into thinking rates have come down further and further and further. Mortgage rates have been basically the same since September 5th of 2025, which is amazing. We have more stability in interest rates in a free market that is not being manipulated by the US government. Back in 2020 and 2021, we saw the same stability, but it's because the US government was shoving money into mortgage bonds and treasuries. Right now, we don't have that. So we're seeing stability, which is great, but the media needs something to talk about. So they keep saying mortgage rates have come down. And now what you're going to hear as a result of this conflict is that mortgage rates have gone up. Well, again, not true. We are in a very, very stable range, and I'm going to prove it to you. And then you can share this with anyone you talk to. Feel free to email this to anybody that you think would find value in it, because I want to make sure everyone understands what's actually going on with housing and with mortgage rates. So we're looking at mortgage bonds trading as always. Up is good, down is bad. And so what you can see here from December to now, mortgage bonds have gone up, but in a very stable range. I want to show you a psychology thing. Like when I look at this, it looks pretty stable just at first glance. But if I remove the 200-day moving average, this line down here, that looks so volatile and scary, right? Oh my gosh, look what happened. Sean said that when mortgage bonds go down, rates go up. Wow, that must be terrible. That is why I think some of this stuff is misleading depending on how we look at it. So for me, we always have to kind of zoom out and look back at history, not get lost in the weeds. So when I look at this right now, I go, okay, where's the trend? I see a ceiling for mortgage rates, and then I kind of see a floor here, right? So since December 18th, we've been in a very, very stable range with not a lot of fluctuation in interest rates. Really, I would say rates didn't change at all in this range, maybe 1/8%, maybe. And so we were at the best levels, right? We were holding, and I was finally hopeful that we were going to break through and get even better in interest rates than where we've been in the last 3 years. And it just doesn't happen. So this was Friday of last week. Iran pops off on Saturday, and I said, okay, I don't know what the market's going to look like on Monday, right? I was just like really nervous. Mortgage bonds sold off a little bit, right? Not a lot, but enough to where, I would say from Friday to today, where we're holding like these moving average lines are kind of keeping mortgage bonds secure, I'll say. You can see here yesterday, it really tested it and said, never mind, we'll just stay right here. So maybe, I don't even think rates changed 1/8%. There's a small change for the worse for sure from Friday, but I don't think the rate moved by 1/8%. Now, we got to zoom out a little further. Because again, I've been preaching that rates have been in the same range for the last 6 months. And here's that range. So since September 5th, we have been in this range, vacillating maybe 1/8 to 1/4%. So this is the worst time, right? So if we look at September, November, and December, those were the worst rates we've seen in the last 6 months. And they were maybe 1/4% of worse than what we're seeing right now. And then we have this tighter range that we've stayed in since December. So basically for the last, almost 3 months. I guess it is 3 months now. So rates are stable, right? That's a good thing. That's all we need to know. Mortgage rates are stable. Now, what's happened to the housing market, or what's happening in the housing market, has been super interesting. It feels like it's 2021 again. We are seeing multiple offers on just about every house across the country. I work in Virginia Beach a lot. I work in Texas. I work all over California. And there's a trend that far more people have come into the market to buy homes. And I really do think that's the result of interest rates being so stable. I think people just got sick of waiting, right? People got sick of waiting for what the media says is happening or has happened. They go, the rates haven't changed. Screw it. It doesn't seem like they're going to. I might as well buy. And I think that's the right approach. Now, if you already own a home and you're waiting for rates to go lower to refinance, I think you're leaving money on the table, waiting for something that may not happen, because we keep getting stuck in this same range. So what we're doing for our clients is we're helping them refinance with a kind of a short-term view. I will forever remain hopeful that mortgage rates go down even further. But what if they don't? I don't want anyone to miss out on savings, and I want the banks to get as little interest as possible. So what we're doing for our clients is helping them materialize the savings now, $200, $500, $800 a month, whatever it is, while we wait for rates to hopefully go lower later. And we're doing it with a really specific analysis, looking at total costs over time, over the next 6 months, 9 months, 12 months, 2 years. If you'd like a mortgage review, all I need is your mortgage statement. Email me your mortgage statement. I'll do a review for you. I'll build you a personalized website that will give you full disclosure, full transparency, so you know exactly what it looks like. I hope this video is helpful. If there's any questions you guys have, if there's anything else you want to see, my whole job is to provide value to you and to make sure that you have as much confidence in how all of this works as possible. So let me know what you need from me. Thank you all so much. Have a great week. I'll talk to you soon. Cheers.